Okay, traders, good day. Today is Monday, May 7th, 2012. It is 2:30 in the afternoon, and we are going to look at the E-mini S&P and some other charts to see what could be happening here. Traders, we are looking at the E-mini S&P daily bar chart right now. As you know, futures trading can be extremely risky and cause substantial financial loss. So if you do not understand the risks behind this game, you shouldn't be in it, and it has been choppy lately. So I'm sure you guys get what I'm talking about. We are looking at the possibility of a big swing day building here in the E-mini S&P. Now, of course, the day is not over. There's 2 full hours, and in 2 hours, anything can happen. But right now, we're just going to go over what the charts look like and what should be coming our way if, in fact, we can settle anywhere between where the settlement would be right now and somewhere up here. Anywhere here will create a swing day for us. So traders, here we are in the E-mini S&P looking at the daily bar. You might recognize that there has been a lot of choppiness going on lately. I'm going to expand on this chart a little bit and show you what I'm talking about. If any of you are having real difficulty lately, don't blame yourselves. It's a part of the year that is just getting difficult to trade. And here is why. If you look from about this day, about a month ago, 21 trading days ago to be exact, you started having down day, another down day, ooh, look, 2 in a row, up day, then an up day, then a down day, then an unchanged day, then an up day, then a down day, then a down day, then an up day, then a down day, then an up day, then an up day, and an up day, and you got 3 in a row. And what's it do? It goes into a down day. Then you get an up day, then a down day, and then we had this pullback. You got, boom, 1 day, 2 days, and it turns into an up day. That's tricky, traders. Do not beat yourselves up if you're having trouble in the last month. That is extremely difficult to deal with for day traders. If you go back a little bit, let's go back and look at the chart. When it was doing a little bit better of a move, this stuff, you get lots of days in a row that show you the same thing. First it dips, and then boom, it runs up, and will give you nice opportunities day after day. So, of course, when you get a trend like this, it's going to get slightly easier to call your analysis. This is choppiness from here. This is very difficult trading. But you would think that what's happening in the last 3 days is showing a trend beginning. And then you put the swing day in, right back into the choppy insanity, the choppiness and the insanity of right back up again. This is May, and we do know from, if we all watched the previous video to the one we're doing now, Friday's YouTube video, I specifically pointed out a chart and showed how many Mays in a row the market has 1 week up and then 3 weeks smashed down. This is the first, well, now into the second week of May. It came right off, boom, boom. So now let's see what we're going to get. So you have that factor. It should come down. You have what looks like a market that is definitely in a pullback. You got lower than the previous lows here. Not supposed to happen, traders. In a pullback, you're supposed to get down. Even if you get close to the low like this one, you don't take it out and then you continue on. When you take out the low, it's not supposed to happen. So that would make you think bearish, and then the day turns into a buy swing day. So yes, these are very, very tricky weeks that have passed. It'll go away. It comes around every year. You just have to stick to your analysis, get through it. If anything, if you need to step back on your volume a little bit, if you're a 5-lot trader, maybe you step it down to 3 or 2 if this choppiness continues any longer. And if it starts to trend like we hope it does, then you can get on the trend. Now, what should have happened today was the market opened, gap lower. It should have basically filled the gap, turned around, and cracked. It didn't do that after 2 massive break days. So instead of, as it opened lower, instead of rallying up and filling the gap, it just kept on going, turning into a swing day. We have to respect what we're seeing here. We may very well turn around. Let's take a look at the next market. Now we have the NASDAQ. And what we need to watch out for, we'll go back and look at the S&P chart as well, is once again another swing day. It looks really, really good for a swing day. We got below this shelf but came back up and got above it. Very interesting, because this basically should have capped us on the rally back up today. We should have hit about that red line and dumped, falling through the shelf that we just broke on the way down, but instead right back up, turning into what could be a swing day today. Again, we have 2 hours. We'll see what happens, but that's what's starting to build here. The other thing that you have to take note to is almost always when you get those dive down days, some sort of turnaround does take place. If we go back almost all the time when you get that quick dive down, some kind of turnaround does seem to take place. It happens often with those dive down days. And I think if we look at the ES once again, you'll see it even more prominent. You have those dive down days and boom, they just turn around on you. Again, you have a dive down day and it just turns the market. Well, here we are with another one. If you look back, again, another dive down day, a swing day gets put in and the market turns. Another dive down day, a swing day turns into a swing day and the market turns. So, don't fall in love with the downside even though it looks like we're supposed to, because if these days do turn out to be swing days today, you're going to have to buy this tonight, not sell it. Getting interesting. Of course, it's going to be based upon today's settlement, but so far it's building some steam after that pullback. Now, traders, you need to remember as we go through these charts, we are in a bull market having a pullback. So you just can't think the end of the world is coming, just the pullback's taking place. So you don't really want to be comfortable short this market. Taking shorts is part of what we do, but you do not want to get comfortable with those shorts. Let's continue on. This is the Russell. Russell has what should be a continuation pattern, head and shoulders. But then the Russell goes up and has a head test which fails and breaks down. But instead of continuing the break, we get a swing day put in. It's confusing lately, OMNIX. Undoubtedly, if you are having difficulty with your analysis, it's a rough patch of this year. Look at how difficult this can be. You've got markets literally pointing in both directions at the same time. We just pulled back pretty hard, but a swing day shows up in the other two I showed you. Here you have what should just be a continuation pattern, head and shoulders, but it fails on a swing day and breaks, opposite of what we just spoke of, and then a swing day comes in. So it fails at the head test, breaks into a swing day, then we break down, now a swing day back up. So you just can't be gangbusters in love with the downside here. But let's look at more markets. DAX doing the same sort of thing. And remember, DAX is notorious for those big drop-off days for no reason, giving you the turnaround. Boom, big drop-off. Maybe today's the turnaround. That is certainly a swing day building in the DAX, a very strong one. So, thinking slightly longer term, we are in bull markets having a pullback. And if this is a swing day, certainly you don't mind at all buying a swing day. Not in a bull market that just had a pullback. Now let's go look at how the currencies are acting. Dollar index. Big opposite swing day building. Big opposite swing day. If dollar starts heading down, it pushes the S&P back up. S&P having a swing day in the opposite direction right now. Looks to me like it's going to continue building that swing day based upon what we see in the dollar and continue on. So if the S&P / NASDAQ / Russell and DAX and transportation average and industrial average, which we'll all get to, if they're in swing days right now and the dollar's in an opposite swing day, that's evidence that the downside came to a halt this morning on that gap lower, and now we're starting to build upside steam. Let's go look at the euro. Euro exact opposite swing day. If euro has a swing day up and does become bullish, the S&P it would make perfect sense for the S&P swing day to work as well. The swing days work well usually in your euro currency. Swing days seem to be working well here. We have a swing day. This would be evidence that the S&P did turn this morning. Then we go look at the transportation average, which is pretty interesting. Actually, let's go do the industrial. Here's what's really interesting. I said, remember, we are in a big bull market. And when you're in a big bull market, of course, when those dips come, you got to get short for them. But you got to be a little afraid to stay short. maybe that's all we're going to get on the downside. We broke through the line and came right back up above it. Last time down it held, and this time, the time before it held. Breaking the average both times like you did here. Maybe we have already seen the low. Much of this depends on how we settle today in another hour and 3/4. Now let's go look at the transportation average. The transportation average, traders. Remember this wacky formation that we looked at 10, 15 days ago. The bear flag into the dip with the turnaround, into a bull flag with the dip, and then the big, massive channel gets built. Then we have this, after just like you see here, the one-day spike rally up, the one-day spike rally up, drops into a bear flag goes into a dip, into a bull flag, into a dip, and then the channel gets created. Look at how we just got right back into the channel this afternoon so far. So again, we can't fall in love with the downside here. You got to be very nimble how you're going to call this. Let your indicators and let your daily charts point the way here. It's going to be rough and tumble every day, trying to get it right until it gets back into its groove. But you got to make sure that you're not falling into this trap that the top is in and we're going to crack. If that's the case, the charts will start to show us even more. Today wouldn't be a swing day, not in my opinion. It is a swing day, once again, even in the transportation average, and back into the channel. Now, what makes this whole thing a convincing argument that we got to be careful and maybe get geared for the long side? Watch this. Let's look at the bond swing day. Ridiculous high gets put in, turns around, smash down swing day. The opposite of the S&P swing day, which is perfect if that's going to head down, like the dollar, that should propel the S&P up tomorrow. So here we are now. It is 2:45 p.m. Monday afternoon. The swing days are not yet valid, not until the close at 4:15. If we close at 4:15 in the same condition we're in now or close to it, that being a downward swing day in bonds and an upward swing day in the S&P, a downward swing day in the dollar index, and an upward swing day in euro. If we settle here at 4:15, that's a bullish signal. That means the market has found equilibrium and has found its legs, and we'll be starting off Monday night to Tuesday's trading session probably by buying the dip. That's what we're looking at right now, traders. I don't know if you're seeing it the same way, but you know that swing days are one of the methods or one of the formations at the OMNI Trading Academy that we take very seriously, and we try to take every swing day that comes our way so that we get our consistency overall with the swing day. Traders, that's my technical argument for why, 1, you cannot fall in love with the downside right here. 2, we may have found our legs on Monday morning. And 3, watch for today's settlements and see if we look the same we do right now. If so, the market is pointing towards, at least at the onset of trading Monday night through Tuesday, a rally ensuing. I hope this video helped to keep you in tune with what comes forward over tomorrow and the next couple of days. Thank you so much for coming to today's class, Omniacs. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.